Welcome back to another episode of Palisade Radio. This is your host, Colin Cattell. Returning guest on the program today is my good friend and publisher of AddictedToProfits.net, David Skarica. David, welcome back to the program.
Good. Thanks for having me, Colin.
You must be relieved that Hurricane Irma has made more of a westward motion and is not going to be hitting the Bahamas. You are, of course, living in North Eleuthera, which is one of the islands in the Bahamas.
Yeah, we live kind of in the northeast, and while it's not going to be good for others, for the island I live on, the storm turning to the south and then to the west was kind of the best case scenario. And you know, so we've only had maybe 30, 40 mile per hour winds. The power didn't even really go out. And actually, believe it or not, it's Saturday afternoon when you're calling me, and it's actually sunny outside. And because I didn't border up my doors because I thought I could miss, I'm actually opening my doors to get a nice breeze through my house.
Nice. Well, happy to hear that the house won't get blown over this time around. David, I want to start by talking about the stock market, which is, of course, frustratingly for you and for a lot of people has continued year after year after year marching up. We're getting into that fall seasonality period where a lot of the smart people around the world start to say, hey, this is a time of year when the market usually crashes if there is a crash. We've talked about this the last couple of years, reasons why it could have crashed last year and the year before. We now know in hindsight it did not. What's your feeling on the stock market fall 2017?
Well, in 2015, we did have quite a large correction in late August. But I don't know. The thing is, you know, it's always difficult to call these type of things. Crashes are very rare events. But there are striking similarities to both 29 and 87. In terms of 29, you had an 8-year bull market. We've had an 8-year bull market. And in terms of both, the seasonal trade has been remarkably the same in that in the November of the prior year, so this being 2016 or 86 or 28, the market almost goes straight up, has a couple small consolidations, keeps blowing off into the summer, and then has one of these fall crashes. And, of course, the first day after Labor Day, we fell quite a bit on this Tuesday this past week. And we do have some potential catalysts for a major market decline. The Fed may begin to shrink their balance sheet. We don't know the extent of the damage of this hurricane because, remember, this is going to hit a huge population center because of the path of it. You know, it's going straight up the Florida coast. And then we also have probably fights over the potential tax cuts that Trump wants to do, and the debt ceiling. They did defer that to December, but we're going to have all this fighting and things going on this fall. And if you remember in 2000, the stock market had a second peak in August after the blow off that spring in the dot-com bubble. And of course, one of the elements that helped the decline to the downside was the fight over the election when it was too close to call between Gore and Bush. So a fight over tax cuts or the debt ceiling or a budget, I think could have the same kind of negative effect, especially at a time when you've had potentially the two of the major population centers, Florida and Houston is the fourth largest city in the United States, kind of decimated by these natural disasters. So I think you are seeing that. And then it actually fits into the technical picture, because just to quickly end on the stock market before we get in gold and precious metals, the stocks trading over moving averages, the actual technical foundations of the market have been crumbling over the last 3 or 4 months. But we just need some kind of catalyst to the downside to really send the market lower. And actually, just so you know, both the S&P and the Dow, as we're doing this interview, are right at their 50-day moving averages. And I would think if that breaks, you could probably quickly move lower to the 200-day. And if that breaks, if you go look at what happened, say, in like that 2015 correction, once the 200-day moving average broke, the market moved even more quickly to the downside. And actually, the 200-day moving average is not significantly lower. It's just under 2,400 on the S&P, roughly 100 points lower, which is only 4% lower than we are now. So I would think that could really cause a move to the downside. And we're going to get into the gold and gold stocks. I think that will really help gold and gold stocks. Well, gold has done well. The gold stocks have ticked up. I think the lack of catalyst in people really moving money into those is the stock market going higher and cryptocurrencies going higher, because people still say, well, you know what? My Apple stock is doing fine. My S&P mutual fund or or ETF is doing fine. So they're still complacent. But once they lose 10% in those investments, maybe a 15% decline, which isn't a big deal, would wipe out all the gains going back to the election. So once something like that happens, I think what can happen in the markets is people shift then into gold and precious metals. And just as a final note, I'm not buying this Bitcoin rally as a move out of fiat currencies. I'm buying that all these cryptocurrencies are a bubble like 1999 in .com stocks. And once the bubble in the stock market bursts, that is going to spill over into that arena. And again, actually, a lot of the people who are buying Bitcoin say as a protection against devaluation of fiat currencies, they actually might end up moving that money into gold. And a guy like Mark Mobius, who is one of the largest asset managers in the world, he used to run Templeton's emerging market fund, is kind of saying the same thing as well.
Okay, a lot to swallow there. I would love to get into discussion on cryptocurrencies, but I don't think we're going to have time today. I appreciate your overall summary there. I want to keep the discussion today gold-centric, which I think, based on what gold is doing right now and the U.S. dollar and the Canadian currency, is a very good thing to talk about. Also, at the end of the conversation today, I've managed to get David to talk to us about 3 junior companies that he's invested in that he thinks are poised to do really well. I think a good place to start, David, is frustration from gold stock investors that their gold stocks are not performing as well as gold and other commodities.
Well, I think with the gold stocks, again, I'm looking at the stock market here. If you go look at, for example, that first move off the bottom during the first half of 2016, why did the gold stocks act so much better and a lot of the juniors so much better than now? I think it was, even though the stock market had rallied off its February 2016 low, you had just still had a big correction in the stock market from the middle of 2015 to early 2016. So there was still that kind of antsiness in equity market investors. But now you've basically had an 8 to 9 month period where you haven't even had a 5% correction in the stock market. So I think that just makes people less inclined to go diving into gold stocks. They're still very, very complacent. But I think once that complacency ends, you get this move into gold and precious metal stocks. And it can take a while. If you go look at this, to me, the setup right now is much more similar to the dot-com bust of 2000 and 2002 than 2007, 2008, where the gold stocks were lagging for a number of years. But once that bear market really got rolling over in 2001 and 2002, the gold equities really, really started to perform well. And when they really moved in 2002, 2003 was when the Fed began to print money and began to cut rates to get just really try to drive the stock market and the economy out of a recession. So I think that could really, really be good for gold too. If there is some kind of decline in the stock market, the Fed cuts rates, and then people kind of move into the equities. I'm not looking at it as, the lagging in the gold equities means the gold's going to roll over. I'm looking at it at some point when you get this trigger in the markets that will move money into the gold stocks, and we could take advantage of it. And also too, the summer is usually very dead for junior mining stocks. When the liquidity goes away, people are on vacation, and they tend to lag during that time period.
David, the U.S. dollar has been on a precipitous decline over the last, call it 9 to 10 months. I think it's caught a lot of people off guard. I'm personally quite shocked that it broke through that support level, which was around 93. I know a lot of other people were shocked to see that. And the big concern before was that gold was not rallying in the face of the dollar dropping. And so people thought as soon as the dollar snapped back, gold was going to get hit really hard. All of a sudden, we come to find out that the dollar continues dropping even faster. So what's your thoughts on the dollar at this point and how that's going to affect gold?
Well, okay, if you go look at the 2000 to 2002 period I just mentioned, it's very similar. The U.S. dollar had a huge rally, and then it had basically this 2-year topping pattern between late 2000 and early 2002. Okay, well, now we had a huge rally, and then we've had about a 2-year topping pattern from 2015 to 2017. And I think the thing was the currency market is way overestimated how much the Fed was going to loosen. It's obvious they're probably not even going to raise rates in December now. And all they might do is a minor tweak of the balance sheet. And the Canadian central bank just raised rates. Europe is going to probably start tapering next year, their QE. So I think this is now coming out of the markets. And I think all this political uncertainty in the States is what I think with the political uncertainty, just so you know, the gold market the long bond, which has been rallying, and the dollar are starting to feel this, and the stock market's kind of the last guy to know, right? So that's what I think's happening too with the dollar, that all this infighting in the U.S. government is starting to show the lack of confidence in it too. Now, it's very oversold in the short term. It could bounce, but we're at the 91, 92 key support level. And if that kind of breaks here, it wouldn't be surprised to me if we just kind of really, really roll over. And again, if you get some kind of decline in the markets and they have to again do QE, then the dollar is going back to 80. It's just quite frankly that simple.
David, I interviewed Eric Sprott last week. I don't know if you heard the interview, but he brought up a good point. And he said with the U.S. dollar decline, U.S. investors or even Canadian investors who own U.S. stocks quite literally lost 10% of the valuation of those stocks based on them being priced in dollars. Conversely, myself and a lot of people who listen to this show have a lot of their money in Canadian stocks. And while those stocks maybe haven't gone up in terms of price in Canadian dollars, you've had about a 10 to 15% move in the price of those assets against U.S. dollars because of Canadian dollar strengthening. I think it's worth talking about what's happening in the Canadian dollar. Has it moved too quick? What's going to happen next?
Well, I think the problem the Canadian dollar might have going forward, the headwind, is quite frankly, I think in the intermediate term, meaning the year or two, we're going to see a blowing up of this Canadian housing bubble, and it's already started. Toronto prices are down 20% from their top. So obviously, if I think the only thing holding up the Canadian economy is this housing bubble, right? So because people are taking loans, equity loans out of their houses, et cetera, like Americans were doing in 2005. So when that blows up, you're obviously going to see a massive slowing in the Canadian economy, and you're going to see the central bank there have to cut rates back to zero and maybe even do Canadian QE. So I think that is kind of the undetermining factor. But in the short term, that's probably all going to take a while to play out. And you've kind of broken this resistance level at 80 cents, which was the high of last year. And then there's a minor high in 2015 to hit around 83, 84. If we break that, probably the Canadian dollar could go back to 90 cents. And you're right, these currency moves are huge. Like, for example, the Italian ETF, the Italian stock market ETF, EWI, is up almost 50% year to date. And the reason it is because the euro has had a similar huge rally against the US dollar, and that also adds the gains the Italian stock market has had. So it does show you how currencies can play a huge role in a lot of these things. Like the Canadian market has not acted well this year, the TSE, but if you were an American, you'd probably be roughly flat in the Canadian market this year because of the rally in the Canadian dollar. And of course, you live in you have a place in Puerto Rico. I live in the Bahamas. It's based on the US dollar, both places. So if we just have our juniors just sitting there doing nothing, well, year to date, we're up 10 or 15% just because of the move in the Canadian dollar. So that's actually a huge factor in it. And just so you know, when I started in the early 2000s, the Canadian dollar got down to 65 cents and it rallied to par. So that was a huge move that if you owned a bunch of juniors or gold stocks in Canada, you made 50% in US dollar terms without even those stocks having to go up.
David, let's talk about the three companies that you said you would talk about at the beginning of the interview. And these are three junior stocks that I know you're invested in. I happen to be invested in them as well. Wherever you want to start, go for it and tell our audience what you like.
Well, I'll start off with Wallbridge because that's one we've talked about for a while, and we both know the story. They just had some monster drill results, which were really, really fantastic. And they're looking to put a small mine into production, which will also, bring cash flow into the company. And those are kind of my favorite stories in the upturn of a gold market, because when you get production, then you get cash flow, and then you don't have to finance, and then you don't have to dilute. And obviously getting production at, say, potentially $1,400 or $1,500 gold is a lot better than getting production at $1,200. So that will actually even solidify the financial component of the company even more. And then from a technical standpoint, because I do trade stocks on technicals. It's tough to trade juniors that way, but you still can. Wallbridge now it's been ticking up slowly. It's back to 10 cents, and the company looks like it could break this 10 to 12 cent area on the resistance level, probably within the next few weeks. And if that occurs, if it could break about 13 cents, it probably could really just break out to new all-time highs and really start to move. So you're still buying that at a relatively low valuation, at a relatively low area. And again, this is the advantage with the gold stocks lagging, that you're at 1350 gold, but the stocks aren't trading like they're at 1350 gold. A lot of these juniors are trading like gold is still at 1200 or 1250. Okay, so then we move on to Mexican gold, which had some, we were talking about off air. They had some excellent drill results in the summer, doing everything that they said they would do. They have a resource of over 1 million ounces. And again, I talked about production. Well, one of my other favorite stories or favorite models is a company that has a resource and then can build on that resource. Because if you do the mathematics of it, if something can build a resource from 1 million to 3 million, and then gold also goes up 30 or 40% in price, the gains become exponential. And small juniors like that have the ability to do that rather than, like Barrick Gold is not going to triple its resource unless it went on some massive acquisition spree, taking everyone over, and then that would cost it a huge sum of money. So Mexican has this great model right now where they've been drilling this thing for years. The resource finally came out. It was good news. People sold the news, which is that happens sometimes. And also they announced the resource during the summer again when things are kind of dead. They also did it when the gold market wasn't as kind of robust or strong as it is today. So I think that was an excuse to sell. But again, that stock here, kind of basing or, holding like the 30-cent level looks like a good play. And I think the last one you were going to get into is a Triumph Gold. And this stock actually, if you're looking for technical strength, is one of the few stocks that is breaking out right now. It's breaking out to new highs. It just broke 50 cents. I think they did a huge financing a while ago of over $6 million. And they have roughly $3 million of this left for their future drilling. They have Goldcorp as one of their largest shareholders. So this is another one I'd be looking at here, especially based on how strong the stock is acting. And they still have a relatively small market cap as well. So you have a good liquidity structure in the company. And it's always good when one of your largest shareholders is a major, not only because you have the takeover component, but because that major is probably not going to turn around and dump all their shares in the market, quite frankly, because they can't, because of the lack of liquidity in some of these stocks.
Yeah, and just for our listeners, the three stocks here, Wallbridge Mining, the ticker's WM on the Toronto Stock Exchange, Mexican is MEX on the Venture, and Triumph is TIG on the Venture Exchange. David, I when you were talking about Wallbridge there and talking about how perfect the setup is right now, where you have gold moving up, and we haven't even talked about the other commodities, but you have gold moving up, and the gold stocks are, you could say, starting to outperform gold, but the gold stock juniors really aren't moving yet. And I'm just so excited right now. I don't think, we could be in a better setup where you still have the opportunity, if you're not fully deployed, to get involved in some of these companies, and you almost have the perfect path already laid out in front of you of what's going to happen. I guess ending here, any concerns on the commodities and gold and this rally fizzling out, or is this thing in motion and hard to see go the other way?
Well, I think we are at a resistance level on gold, that 1350 to 1370 area. So we might see and seasonally, just so we talk about these. I talk about these seasonalities a lot. Actually, this kind of mid to late September, sometimes when they can see short-term tops, and then you pull back into November. But again, as a buyer, that's exactly what I want to see in a way, that it gives me another 2 months to average into these things, because that November to March or April period of that is the strongest seasonal period. So in the short term, I would say that would be it. And of course, I talk about my fears of the stock market. Well, a 10 or 15% correction probably wouldn't hurt these companies at all. But in every major stock market crash, like 2008 or 1987, the gold stocks do see selling, because they just get in the short term taken down with everything else. So you could see some selling pressure if a correction turns into a bear market or crash type scenario this fall. But again, to me, if you just be patient, you slowly average into these things from now until the November period, you should do very well, because any correction or fall in the market is going to be met with more liquidity added into the market. And I think that is when these things really become coiled spring. And I really believe that this fall, into next year, we could have a very, really, really good gold market. And I think that once gold goes up, by the way, people are going to be surprised how fast it goes. I could basically foresee us getting back to those 2011 highs by the end of 2018 or 2019 if we begin to break out this fall.
What kind of upside do you see for junior stocks? And not to put price targets on, Wallbridge, Mexican Gold, or Triumph Gold, but for somebody that's invested right now with gold poised to move, I mean, are you talking about 5x gains, 20x gains over the next few years? What do you feel is possible?
Let me give you two classic examples. I'm just thinking about two stocks that were two of my big winners in the junior arena. They were Desert Sun Mining and Avion Gold, both run by Forbes Manhattan, which is a group out of Toronto. And the same thing, they both were near production plays that were increasing the value of ounces in the ground, which I've talked about here, which are great models. And Desert Sun Mining went from like a quarter, and I think it was taken over by Yamana at $6 or $7. It's so long ago, it's hard for me to remember. And Avion went, they took over an old mine in Africa that Nevsun used to have. This stock went from 6 cents, and they put it back into production right when the gold market upturned in 2009, and the stock went to $2 and eventually got taken over for 90 cents. And by the way, the only reason it went back from $2 to 90 cents was because there were political problems in Mali, the country where they had production. Had really nothing to do with the mine or anything. So, right there, I'm just showing you two companies that went up, 30, 40 times. So that really, not all of them are going to do that. But if you have, like I said, in my opinion is, again, I like the near production or the companies building resources. I really think that if you have a basket, we gave you 3 here today, but I think if you have a basket of like 10 of these or 20 of these, you could have a handful to do that. And remember, if you have 20 stocks and 2 or 3 of them go 30, 40 to 1, and that's how Rick Rule or Doug Casey or all these guys have made money, that really makes it for it doesn't really matter what the other 16 or 18 stocks do.
Yeah, absolutely. David is the publisher of addictedtoprofits.net. He's got a free list and he's got a premium list where he's giving away companies like the 3 we talked about today, as well as positions to go short against the market or actually long in certain stocks as well. I'm obviously a subscriber. David, anything else to add to our audience before I let you go?
No, just that I don't want to be totally blindly bullish, but just the chart setups, the way everything's set up right now, I really believe, at the latest by the end of the year, and maybe even within the next few weeks, we'll probably see this breakout of this 1350 to 1370 resistance level, and then really move significantly higher late this year and into next year.
Perfect. David, thanks for coming on.
Yeah, thanks for having me.
Think you understand the junior mining sector and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be, it actually could be quite violent. It could be a rip your face off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen?